Thank you very much for being with us this morning. You heard Eunice Yoon's report. There's a lot of complexity, obviously, in what's happening with U.S.-China trade. Is this a situation where we should believe the latest headlines again that there is positivity around U.S.-China trade, or have President Trump's own words been trumped? He said it. Maybe we'll wait until after the 2020 elections to get a deal done.
Yeah, so you see, the president's a very tough negotiator. He's obviously a very difficult negotiator. What you're seeing is a classic, and I've been a part of so many of these in Washington, classic negotiating tactics on both sides. The president is suggesting that, I'm not in a big rush, right? I think China should, and I would advise China to probably read into this, suggesting that there is, and what Eunice said is exactly right, that a re-elected President Trump, who knows where he goes on negotiations, right? I mean, he's obviously proven that he'll use tariffs to drive a deal. He could double those or triple those if he wanted to in a re-elected state. Let's assume a Democrat wins and President Trump is not reelected. As Eunice suggested, really just now, China is not eager to put human rights or other issues, non-economic issues in a trade agreement. I've been doing trade agreements now for almost 12 years. I've never seen a Democratic administration, not one of them, not want to and forcibly put human rights, labor rights, and environmental rights in a trade agreement. I don't believe China's going to want to sign up to that. And so China is very eager, and I believe, and my sources in the administration suggest, that they're motivated to get a deal before the administration, before this term of the administration, because the next term is really uncertain.
It's a wild card, right?
Extremely, and it's really bad for them. Their economy's faltering. They're facing these difficult tariffs coming to the United States, and so they're motivated right now to get to a deal before the end of next year.
So that implies the U.S. actually has a good amount of leverage in this current situation, and if that is the case, I'm curious about whether or not the market run-up that we've seen has been predicated a lot on not just perhaps Fed easing policy, but also this idea that we will get a phase one trade deal. So how much of the market's run should come off if those trade headlines are less positive going forward? Can we still hover around these record high levels?
Look, I believe that the Fed will do its part to make sure the U.S. economy remains strong. And obviously the administration is fully geared to make sure that the economy remains strong, certainly through the end of next year, but probably through, if reelected, the next 4 years. No one wants to see the economy falter in any way. But trade is an important part of this. But at the end of the day, we have had some slowdown in China, and really, I know it's difficult, and we all chase headlines. But the reality is, the jobs numbers are still great. The economy still remains resilient, and so I would use a little bit of caution to suggest that the market not be so quixotic. But I know that it'll chase the headlines. But the reality is, and the challenge is that we have a problem with China, but I think that we'll get to a place of yes, because of the challenges I named before.